What's going on, everybody? Welcome to the Nomad Hedge. In today's video, we're going to take a look at the S&P 500. And right in front of us, we do have the SPY ticker symbol. And so the purpose of this video is to try to present where we currently are in this market. And as you can see here, we eventually found support here at this intermediate trend line. So we're actually looking for this trend line to break at some point. Now, what we saw yesterday during the or after the pause of the tariffs, we saw a lot of buying pressure. So we think that this is the start or initiation of the dead cat rally, and we believe that price will start to begin to retrace upward here to around this 0.618 or golden ratio for us to then see price starting to decline again. And we're looking for a few targets here. We do have the 0.618. Notice here that we also have an open gap here. There's also this POC line here. So eventually, once price starts to materialize, moves ups and down, we're going to get an idea where the market will find support eventually. So you might be asking, okay, so what's then what happens next? Well, as you can see here, this entire move is impulsive. So in Elliott wave, we're looking for 5 ways upside move. And this is the intermediate degree. Okay, so this is the intermediate. We're looking for a fractal here. We're subwaves. So we concluded wave 3, 4, and then wave 5 of this intermediate degree. So after the intermediate degree, we have the start of a primer degree. So this will be labeled as 1, 2 here of primer degree. Okay, so this will be a huge buying opportunity if we find support at some point once this trend line has been broken. Now, the reason why we say this trend line has been broken is that typically when you do conclude a 5 ways up move here, you do want to see a break of trend. So that would confirm that the entire move has been corrected. So that's what we're actually working on now. We want to correct this entire move here. So the way I look at this correction here is that we do have a subwave here. We're a wave ABC of sub-minute degree, of a lower degree. And so we're actually looking for, just to simplify this, that this is a wave A right here. And then we have a wave B here. So price would correct upside here, and then we're looking for a wave C here. So that would be the conclusion of this correction. And then we're looking forward of this wave 2 of primary degree. Now, if you don't understand Elliott wave, that's fine. I know it can be a little bit tricky, but we're basically looking for a new cycle to begin after this corrective move has finished off. So what we can do here as well is take a look at the S&P 500 here on a daily chart. And we can see here, this gives us more clarity here that we have an open gap here. There's also an auction here that we haven't closed yet. So price could eventually start to gravitate towards these levels. As I mentioned previously as well, there's this POC line, or point of control. It's basically where the highest volume of this of the trading activity occurred within this entire upside move here. So that's where we basically see price start to begin to find some bottoming here. And if we go back here to the weekly chart, we can see here that sellers are starting to get exhausted here. We're looking at the money flow index here. We're seeing levels here corresponding, or what we would say is, let's get back here to the indicators, that they are oversold, right? So we're seeing sellers here reaching very extreme levels. Buyers have started to reach this on the DMI. We're looking at the 20 or below 20, and that's when we start seeing buyers then eventually re-emerge once this correction has concluded. And we can see here as well, I mean, on the short term, on the weekly chart, we're seeing the RSI heavily oversold here. So this is what we need. We need this correction to conclude, so we can get this a strong base for prices to come down significantly, and that would attract a new set of buyers, so we can push prices higher at some point in the future. So that's how we view the markets here from an Elliott wave perspective. Obviously, we also take a look at the indicators. More specifically, we're looking at the RSI. So the daily chart is going to provide us more of an entry point um, signal once we're starting to get back in. So any upside move here, we just view it here as a corrective move for the markets then to begin to decline. Obviously, we could be wrong here. We could also be wrong about a potential primary indicative wave 1, 2. But currently, I mean, I could make the case for a very bearish view or a different Elliott wave count that would take us much lower. But this is my primary outlook of the S&P 500. I do eventually believe that we are going to kick off higher. I don't think I mentioned that. Maybe I forgot to mention. We also have the anchored VWAP here. So what we want is to break below the anchored VWAP. The reason being is that that gives us an indication that sellers are becoming exhaustive as well. So as long as price stays above the anchored VWAP, the majority of those who bought the S&P within this level are still in the money. They're still break even in their since their purchase. We want price to break below this level here so that we could start seeing some more selling, and then at some point, once price starts to decline, that would attract a new set of buyers. So that's how we view the markets. We're obviously going to keep you guys updated. You can follow me on X at Nomad Hedge. I post daily there, and I'll obviously going to make a new video perhaps tomorrow or anytime soon in the future. So that was it with this video, and I'll see you guys in the next one. Take care for now.